So obviously there's been a really big run in prices for Queensland and WA, almost vertical in the last few years. Maybe that's a bit of an exaggeration. And the attractiveness of Queensland in the last few years has been probably not so much anymore strong yields, but now that the price growth is really taken off, the yields have been eroded. And WA was a bit of a yield play, and obviously it's started to boom recently. Do those two markets still have a lot more legs in them left for the next sort of 5 years? And how does that fit in the context of Melbourne having yet to take off?
There's a lot to unpack there in terms of what's driving all these markets. So in all three markets, different things are driving the price dynamics. What they all have in common is Sydney real estate investors, in the sense that over COVID, real estate investors became a lot more adventurous than they had in the past. Investors have been driving a lot of the price growth in Brisbane and Perth, but that's not to say that the factors going on there are the same. Brisbane has a long history of investor-led price growth and investment there. Perth, in comparison, is a relatively new player to this, and largely because it's had that decade of stagnating price growth, led to a decline in housing supply. So that collided with massive amounts of population growth over COVID in Perth. So quite different dynamics in each capital city.